Bank of Canada holding steady in its interest rate decision, the last one of 2025. It's stuck with the overnight rate at 2.25%. What could this mean for our currency? Usually, when a central bank holds off from cutting rates, it supports a currency. We're joined by Steve Kulchyk, VP of Options Dealing and Structured Products at Monex Canada. Thanks very much for joining us. Just remind us, what is Monex Canada? What do you guys do?
Absolutely. Yeah, Monex Canada is an international brokerage. We work generally with corporates and institutional companies that effectively are looking to manage their risk, deal with payments, and exchange currencies.
So what is your view on the Canadian dollar? It has had something of a rally against the US dollar lately.
Sure, yeah. The hold from the Bank of Canada yesterday certainly helps support the loonie. The one thing about the long term, though, right now is the fact that structurally, at least, we're looking for reasons why people will want to invest in Canada, right? So from a Canadian dollar strength perspective, I still think that it is a little bit limited from a big run to the upside against the US dollar especially. But tariffs are going to play a really, really big role in that moving forward.
Yeah, but do you think there's going to be a cloud over Canada because of the tariffs?
Because of the tariffs, the housing market is not helping as well. I mean, when you're looking at any sort of central bank movement, when it's going to react to a currency, when a currency is going to react to the central bank movement, you want to know that that currency also has a reason to be invested in, right? So structurally speaking, from a housing market perspective, from infrastructure as well, on the industrial front, I'm still waiting to see if we can find that reason for international investors to come into Canada before I can really call for a big Canadian dollar move to the upside.
But as you know, though, the federal government is going all out to try to stimulate private sector infrastructure investment. But you say we've yet to see how the cake turns out here.
We still need to see what happens. I think it's too soon to make a directional call on that.
Tell us how corporate customers have been managing their people who actually need to use foreign currencies. How have they been managing their currency exposure?
Sure, yeah, absolutely. It really all depends on how they're pricing, right? So effectively, if they're using a budgeted rate-based approach, effectively what we're seeing is, they're setting a budget rate for the year. They're looking at, okay, well, what am I going to set my pricing based off of that? For a lot of those companies, just because of the volatility that we've seen over the last 2 years, they are starting to increase those hedge ratios. And with a lack of implied...
Sorry, you went into a bit of jargon there. Sorry to interrupt
no
you.
Problem.
What do you mean increase hedge ratios? Sorry.
So they're starting to hedge a little bit more of what their expected cash flows are going to be for the year than what they normally would have done in the past. So for instance, let's say there's a company that is going to be doing $20 million in foreign exchange for the year, and it's going to be equally priced out over time. They're now hedging, 60 to 70% instead of the 30 to 50% that they would have been doing before, simply because it's been so volatile.
And obviously, if you're an exporter, you're earning foreign currency, a rise in the Canadian dollar hurts you.
Absolutely. Yeah, and a lot of these companies can't change their pricing. So what they're doing is, like I was saying, they're increasing those hedge ratios. We are seeing them move away from short vol products as well. Implied volatility hasn't really kept up with realized volatility. So shorting vol is not really seeing the returns that we would have seen, this time last year.
So what kind of hedging do they do? Just swaps?
They're doing a lot of swaps, they're doing a lot of forwards, and a lot of long vol products on the options front. So vanillas and some binaries to sort of offset any sort of potential margin calls.
When you talk, though, to clients, they just are uncertain, as you mentioned, yeah.
Absolutely, it's a coin flip.
Mm-hmm. Right. What about investment industry clients? What are they doing? Because they might have big portfolios of foreign stocks, for example.
Absolutely, yeah. And it really all depends on where their portfolios lie, right? So when we're looking at, equity portfolios and investment firms, they are starting to sort of do the same thing. They're keeping with the rolling forward approach, the swaps approach. They are starting to maybe play around with their hedge ratios, but that's really sort of as fancy as they'll get. On the emerging market front, though, they do need to sort of get a little bit fancier in that implied volatility is very, very high. However, carry is very high in these currencies as well.
So, the interest rates you need if you're borrowing, yeah.
Exactly. So the cost of carry is so high that if you were to just put on a forward or a rolling strategy, you're effectively locking in losses.
Can you remind us, we heard some drastic, well, I won't say predictions, but there was concern a couple of weeks ago after the Japanese finally let interest rates move up. Mm-hmm. People were saying, that global carry trade where people borrowed cheap in Japan, yada, yada, was going to erode. Has that come to pass?
Not in currency markets just yet. Obviously, we have seen a bit of a reaction in the yen, but I think it's still tough to see what's going to happen in the future on that front.
Because it has been for decades, it seems, it's been a cheap source of funding for people with an international perspective.
Absolutely. Yeah, so they might be going elsewhere in the longer term, medium to longer term.
I'm just looking at the Canadian dollar versus the euro. So we're looking at around 161. It'll cost you in Canadian dollars to buy a euro. So we have strengthened a bit. In mid-October, it would have cost you $1.64.
Absolutely, and a lot of our importers specifically that are purchasing euros in order to purchase inventory, they're seeing this as a buying opportunity, where this time last year, this would have been an extremely high rate, right? So I think a lot of people, when it comes to the euro, are starting to reconsider what a good rate actually looks like, specifically against the Canadian dollar.
Right. So, but I mean, we have weakened. So we're about a buck 62 now to buy a euro. But even at the end of 2024, it was less than a buck 49.
Yeah.
So we have weakened. I guess we've been dragged down by the US dollar this year.
Dragged down by the US dollar, absolutely. I mean, we sort of work in tandem with the US dollar, but at the same time, the ECB ended their cut cycle a lot earlier. So they have had the benefit of hindsight. But now when we look at the Canadian dollar, a lot of people right now are hoping that now that the Bank of Canada has sort of said, hey, let's pause everything, let's wait and see what happens, that potentially the Canadian dollar can sort of rebound against a lot of these other currencies that it has been underperforming against.
And just finally, crypto or blockchain, has that been coming into your business much? Or
it hasn't. We have seen a little bit on the payments front where people are using blockchain-based payment rails, but not necessarily into the Monex business yet. I know that stablecoin is really kind of that buzzword that's out there right now, but we haven't really seen it affect the industry just yet.
That's interesting. So the adoption is not head over heels. So people are being cautious, it sounds like.
Exactly. I think that there's still a lot of questions that need to be answered, specifically from a corporate front. I think there's a lot of people that are out there and they're still not sure about the technology itself.
Steve, thank you very much indeed.
Thanks for having me.
Steve Kulchyk joining us there, VP of Options, Dealing and Structured Products at Monex Canada.